Good
I'm hitting
morning.
okay.
Good morning. This is John Richardson speaking with you from Toronto, Canada. Today is Saturday, June the 29th, 2024. And I am very excited today to have joining me return guests from beartax.org, reintroducing you to Jim Bennett and Steve Hayes. And boy, have we got a lot to talk about today. This is, of course, after the release of the Moore decision last week. And, what does that mean? And what does that mean in terms of the possible future of the fair tax, et cetera? So here we go. Jim, Steve, how are you doing? Jim, what's happening these days?
Hey, John, thank you for having me on. And yeah, I think I've read the Moore decision, both the lead opinion, the two concurring opinions, and the dissent. And from the viewpoint of somebody who formerly lived outside the United States, I can see this as one more encroachment of the U.S. Internal Revenue Code into the lives of people who live in a country and are in effect regulated by tax code of a country where they do not live and do not receive the benefit of having to file a tax return and possibly having to pay tax. So I think this is a fertile topic of discussion that I look forward to having the session.
Well, thanks for participating. And just for the record here, I mean, you spent some time living outside the United States yourself, right?
Yes, I have.
So there you go. Direct experience with a life and time by a U.S. citizen abroad. Steve, what's happening these days?
Well, I think that I keep going back to this as my only solace from the decision is that Lincoln said, if you want to get rid of a bad law, enforce it strictly. And he was talking about the Fugitive Slave Act, but in effect, that has some similarities to people living outside the United States. You're dealt with as if you were a fugitive slave because you are made to be subject to a tax system that's not territorial, it's international. That means that the IRS can reach out to you no matter where you live and create havoc for your life. And it's only going to get worse as long as you have that type of territorial or international, not territorial system, because one of the dreams the IRS has actually said, and they've commissioned a study on this, is that AI will allow them to no longer have to wait for John to file a tax return from Canada. They will hopefully in the next 5 years be in a position where they can just send John a bill.
Oh, how cool is that? How cool.
Yeah. And then once John gets it, of course, this is literally what they said in one of the articles. He doesn't have to pay it. He can contest it. However, you have to fight, and you know how much fun that is with a computer. And so you're talking about much more problems, I predict, for those people living outside the United States, not only outside, but also in the United States, because you're going to have these notices. Like today, I get calls from friends that say, I just got a notice from the IRS that said I owe $580 because I misreported something. And I called my accountant and he told me, no, you didn't. It was reported. And he said, what should I do? And I said, it would probably cost you $100 to call your accountant. It's going to cost you another 1,000 to fight this. Pay it.
Yeah.
But I don't know it. Pay it. Because it's the cost of doing business under this system. And what happens if you go to something like the fair tax, it's no longer international, it's very territorial, because if you're not spending money, John, in the U.S., you're not paying tax in the U.S.
Yeah. So, just for listeners here, we're all very familiar with the fair tax and its obvious virtues, but I think it might be a good moment to briefly outline what the fair tax is and fundamentally why it's different from an income tax.
I think Jim's got a good answer for that. Jim, go ahead.
Sure. Well, first of all, the fair tax is a bill in Congress. It's H.R. 25 in the U.S. Congress. And it replaces, and replacing is the operative word. It's not an additional tax. The current income taxes, payroll taxes, and estate gift and generation skipping taxes, also known as death taxes, with a consumption tax on all services and all new tangible goods sold at retail. And here's what people who live outside the United States are going to really like about it. The good has to be sold in the United States. So I lived in Germany for 6 years. Under the fair tax, if we had that, if I'd bought something in Germany, that would have been none of the Internal Revenue Service, which there won't be any longer because state tax collection will devolve to the states. Basically the consumption takes place in Germany, not in the United States. Now, if I take a trip back to the United States, either on business or to see family, and I buy something in the United States for consumption in the United States, then yes, I pay the tax. And that's very much the business of the US and state tax authorities. But when I go back to Germany and buy something in Germany, that's nobody's business in the United States, which is the way it should be. And I'll just mention a couple of other features of it. First of all, there's no tax on business to business, and there's no tax on exports from the United States, so that internally, the United States economy becomes much more competitive because goods services produced in the United States become much more competitive in foreign markets. And in the United States, one of the ways we get rid of the regressive argument, and most sales taxes are said to be regressive, is there's a feature called the family consumption allowance. And what that is for people living in the United States, if there's the household receives a payment at the beginning of the month to reimburse that household in advance for tax on consumption up to the poverty level. So in effect, there's no tax on consumption up to the poverty level, and that treats everybody the same way. And above the poverty level, everybody pays tax on consumption, which people have control over at the same rate. So I hope that was a good Cliff's Notes version of what the fair tax is.
Absolutely, and if I were reading the Quick Notes version, I would probably have a note that would say what I just got out of that. I think a few very important points. The first is turns the United States into a territorial tax system, doesn't care what's going on outside the United States. Second point is that within the United States, people are no longer taxed on their income. They're taxed only on what they purchase, taxed based on what they purchase. And of course, there remains something equivalent to the standard deduction in the sense that people of lower means are exempt from the system altogether. Would that get me a C+ answer on the exam?
Oh, I'd give it an A.
No, I think it's a good answer. And an example is that a family of 4 buying $40,000 of new goods and retail services, new now, not used, but new goods for tax, is not going to pay any of the fair tax until their purchases exceed $40,000. It's actually a little higher this year, but using 40 as a bench. And that means that even though the rate at retail might be 30%, if you equate it to going to the store and paying a GST or a regular sales tax, the amount is only taxable on the additional amount. So, for example, that family of 4 spends $60,000, so $20,000 over the base. They're going to pay effectively $6,000 or a 10% rate on their income.
Because
now, when they're paying 7.65%, John, in Social Security tax already, you're talking about most of them at 60,000 are going to be paying more than that in income and Social Security tax. And that's if they buy only new. But how many people do we know family of four making $60,000 that go out and buy new car, that go out and buy new furniture all the time. How many people do we know making that kind of income that buy new toys all the time? So anything that they buy that's used is not subject to the tax. And I think it puts the control, I think what Jim's point is, back in the hands of the individual. It makes me an adult. I don't have to be told how to behave by some elite in DC. I can make my own decisions. I can buy that used car and pay no tax to the government, or I can buy the new car and pay the fair tax. But either way, it's up to me. I mean, John, you and I could go shopping, and I'm sure you'd walk right by the used car section and go to the new car section and buy that new car. And whereas I would probably walk over the used car section and buy the used car. Not only do I want it to be cheaper, but I won't pay fair tax. But that's my choice.
Yeah.
Under the income tax system, it doesn't matter.
To put that,
Your choice.
and I think Jim alludes to this, right? It seems to me that one difference between this income tax that is so incredibly complex. Maybe we'll get to that relation to more in a minute. The income tax and the fair tax is that the fair tax actually encourages personal responsibility, which is good for the country, and the income tax, by having all these deductions and this, that, and the other thing, doesn't really encourage personal responsibility. It would encourage just trying to save yourself from a complex set of rules to govern your life.
Mm-hmm. Yeah. And all the time you spend trying to save yourself from those complex rules would be better spent with your kids, your grandkids, or even looking at a butterfly. It's of no value to anyone except people who get paid for helping do this, and the bureaucrats who want to control your life by putting more and more restrictions on it.
Yeah, no, actually, on that point, I think we should get this in the conversation. You are a tax lawyer, right?
I was a tax lawyer. I'm called a recovering tax lawyer. You never can get out of being a tax lawyer. And I was one of those people that was somewhat responsible for the 76 Reform Act because I was doing movie tax shelters in the early 70s. And they shut that down in 76. And then I did coal mines and we looked at records. I mean, we did all kinds of things that were legal, never were, successfully challenged until they changed the law.
Well,
and,
that's
they were successfully challenged. That's why I say they were legal. They were going by the letter of the law, and the IRS was never able to prove they weren't.
Right.
And they tried.
So it's almost as though, what this system has done is created this elite system of tax lawyers, high-end accountants, basically, that, exist just to, save people from provisions of the Internal Revenue Code and help them with a hopelessly complex compliance rules, right?
Absolutely. That was the whole thing. And for me back then, it was very heady because I was a young guy who was, I would be talking to a chairman of a company who would take my call, interrupt a meeting to take my call because I was saving him all this money in taxes. And
do you think that the sign of a decaying society is when an executive will drop everything to talk to a tax lawyer?
Yes.
Probably.
And yes, I think that's a very good point because that shows you priorities, which are very misplaced.
Just think of companies that make business decisions based on tax issues instead of business issues. And just think of how much more responsive companies that produce goods and services would be to the wants and needs of consumers if they could consider economic issues instead of tax issues. And when I think about it, it's just mind-boggling.
It's totally mind-boggling. Actually, let me ask you this. I just had this memory trace of something. Am I right that sometime in the last 15 or 20 years, there was some tax benefit to driving these SUV gas guzzlers?
Well, they actually took away some of the benefit to encourage you not to drive it. And because they had a surcharge basically on the SUVs that would be on there. But frankly, that's the kind of thing that we're talking about that would be the paradigm shift. Because under the fair tax, you would have the choice, John. And it wouldn't matter if you offended some little bureaucrat who hasn't had a job outside of government since they mowed yards or babysat, who is trying to tell you that they're smarter than you are. And they may be, but that doesn't give them the right to tell me how to live my life.
So I think we'd all agree. I think this is perhaps worth stating, okay, that part of what we're talking around is the notion that this tax code is about way more than taxation. It's about enforcing certain lifestyles,
Right.
etc. I mean,
Right.
is that what a tax system should be about?
I think historically, tax systems that were in place to collect money. I mean, we're all fans of Charles Adams.
Yes.
I, in fact, sent you that link to one of the lectures. I think they're all available, John. They're certainly worth listening to.
Yes, absolutely.
At von Mises Institute. But the whole thing in his history of taxation, and I've heard him go over this, when we were on panels or in different groups, where people who started off trying to raise money to fund government services, eventually the society devolved into one that was trying to control lives as well as raise money. And that's when they started to fail. He believed that was a huge factor in these thriving civilizations becoming no longer thriving. Yes, good and evil.
Book, okay, which I think we would all recommend is what is For Good and Evil, Taxes and Civilization by Adams. And it was always, I didn't know about this book till, I don't know, maybe in the last 10 years. This guy apparently was teaching at the University of Toronto.
He was for a time. Yep.
Interesting.
Yeah, Charles was a tax attorney and he lived in the Cayman Islands and he made a lot of money doing the same kind of things that I did. That's one reason we got along.
So not only was he a tax lawyer, but he was a good one.
Yes, he was. He was. And then he moved to Canada and complained about how restrictive it was.
The tax system in Canada?
Yeah. Yeah.
God.
But I think that the whole point, and like with the Moore decision, we're all lawyers. We can get into the minutia and bore everybody, but we can basically say that no matter how and for what reason Kavanaugh, who wrote the majority opinion, tried to cloak it, put it into words, you really have said that it's okay to tax income of a U.S. citizen even before it's paid to the citizen. In other words, there's no realization required. Kavanaugh's reasoning was it was enough that the corporation in which he owned 13 or 14% had received the income in India.
Just pause on this for 1 second. I don't know if people listening to this know a lot about the Moore decision. Jim, you want to take a stab at this? Can you just explain the context and a bit of the facts that gave rise to this?
Sure. The Moores decided to get together with a fellow in India to produce basic agricultural tools that were unavailable to these farmers who were extremely low income, low resource. And they formed a company in India and took a 13% equity interest in it. And they didn't have anything to do with the running of the company, but Mr. Moore would travel to India and meet with his Indian partner occasionally. And the company became astoundingly successful. And over the years, the equity grew. I think their initial investment was about, I think it was $40,000, and the net worth of the company grew to something like $150,000. And then along in 2017 came Trump's Tax Cuts and Jobs Act, and the purpose of that act was to make taxation a little bit more territorial to the United States. So that sounded like a step in the right direction. But in order to recoup some of the losses that the Congress was afraid it was going to incur, the Tax Cuts and Jobs Act looked back, as I recall, about 10 years, and maybe some of those periods were periods where the Moores didn't actually have any interest at all in the company, and decided to look at the amount of income that that company had realized. And the Moores got a tax bill for $14,000 and change on income that the company never paid out to them in the form of dividends. Now, normally what happens is a company makes a profit and it pays taxes on the profit. Then it pays an income to its stockholders, and then the stockholders pay income tax on the dividend. But the Moores never saw a penny of it, but they got a $14,000 bill. And the Moores decided they paid the tax and brought an action in the federal district court for a refund. And they advanced a number of theories, including it was unconstitutional, and it was they had a few others, and I just read the case yesterday. But the case, it went up, district court decided against them. It went up to the Ninth Circuit. The Ninth Circuit decided against them, and the Supreme Court took the case on what we lawyers call a writ of certiorari. And the Supreme Court released its opinion last week. The lead opinion was written by Justice Kavanaugh, joined by 4 of the other justices. And Justice Kavanaugh focused a lot of his attention on the necessity to realize income. And he looked at S corporations, he looked at partnerships, which most of us know are readily distinguishable, because in a partnership doesn't exist as a separate entity. A partnership is just a combination of partners, and the partnership income is taxed directly to the partners. And in the case of an S corporation, that's a special animal set up under the Internal Revenue Code where certain conditions have to be met. It has to be fewer than 100 shareholders and things like that. And that's a kind of a corporation where the stockholders consent to being directly taxed as a pass-through for the profits of the corporation. Well, in this case, this was an Indian corporation, and the corporation realized the profits, but the Moores, as 13% shareholders, were considered a controlling interest, but they didn't really control the corporation because they had less than minority share. But nevertheless, the IRS said that this is a controlled foreign corporation, and therefore the income of the corporation is going to be imputed to the Moores, even though the Moores never saw a penny of the income. Now, there was a concurring opinion by Justice Brown, joined by Alito, where the justice said that we can't really ignore the corporate form, but on the petition to the Supreme Court, the Moores didn't raise the particular issue, so we're going to go with the minority. Now, I think the really interesting opinion was a dissenting opinion written by Justice Thomas, and that was joined by Justice Gorsuch. And that opinion went through the history of the distinction between direct and indirect taxation. So if you want a primer on that, then just read the dissenting opinion. But yeah, Justice Thomas was very adamant that this was direct taxation, which was the equivalent of realization of income, and therefore he thought that he applied what to most of us would be common sense, in that the Moores didn't really realize the income, and so he ruled against he would have ruled in favor of the Moores had he been in the majority. So I think that kind of summarizes what the decision was. And so I think, yeah, citizens abroad should take notice of what their interests are in various corporations, particularly the ones that they control. So
But I mean, we just look at this in an incredibly simplified way, right? So what this is a law that makes the taxpayer pay tax on income not received by them, but received by somebody else, not in present day time, but in the past, right?
exactly.
Sort of like,
In fairness, John, that was a one-time tax. In other words, that was simply, all right, we're gonna clean the slate and start over. You pay this tax, and then we're gonna.
but it's not a one-time tax, right? So
But now, no. But now, what's going to happen is that Congress and the IRS can start doing that to everybody. But that was the case that was before the court. And one of the problems that I thought was was revealing was Justice Jackson's opinion that you can tax anything. And the theory was that, like, for example, your
Yeah.
house.
income without any realization of income.
No, at any time.
Yeah, that's right.
Because the theory is, and this is the theory, it's not okay for me to have income that I escape tax on in an entity that I control. Because I could make the decision to pay myself, but I don't. Like the old game that lawyers used to play is they'd put everything in their trust account at the end of the year and not pay it to themselves until the next year. Well, they could have paid themselves in the year they got it, but they didn't. And so the IRS, when they caught them, they said, you should have paid it in that year. There's penalties or whatever, because they control it. And that's been sort of the basic idea all along. But if you read Jackson's statement, like your house, if you're Jim's house, Jim's lived in his house quite a while. It's appreciated greatly in value. Right now, he's paying state property tax, but the appreciation is not taxed because he's decided not to take the income. And somehow or other, that's wrong. That's unpatriotic. So therefore, what they're going to do is say to Jim, you could have sold that house and you would have had to pay the tax on the profit. However, because you chose not to, you still owe the tax. And so we're going to tax you at X number of percent on the appreciation. Now, maybe it's a one-time tax, or if you're Elizabeth Warren or Biden, it's every year on the appreciation. And her theory is that that's totally fine. And the reality is that if enough people of her mind get into Congress and you have a president that goes along with it, they know it's going to take, 7 years to get to the court? So even if they pass something that the majority today believes isn't applicable, because a lot of what Kavanaugh said is not really binding. It's dicta, we call it, just comments, because it wasn't on the case. It's going to take 6 to 7 years and maybe millions of dollars to bring it to the court. And they can say, well, maybe by that time, Justice Thomas will have retired. We'll have Roberts out. We'll have a new majority that will support Jackson's point of view. So that, to me, is the real threat, not only for Americans abroad, but for everybody with that decision, is that no, it doesn't apply to John owning shares in a foreign company today, but it will soon.
Yeah, I think that's exactly right. And to tie this though into the difference between the current tax system and the fair tax, I mean, it seems to me that people should be supporting the fair tax if for no other reason, but it's the only defense they have against governments.
That's right. It puts the control back in their hands. That's our point, is that, look at it this way. If, back in the 70s, actually the 60s was when it first came up, Hoffa was so upset that they were the Teamsters Union was threatening to make everybody stop withholding for the Teamster employees. And LBJ took it seriously enough, and I know this because David Brad was a friend of mine, and he was in the Treasury Department at the time. He was tasked with going out and coming up with something that would overcome this. He came up with a sales tax. Federal sales tax is the only way that they can continue collecting revenue. Now, if you went to people and said, we're going to have a national rally in the U.S., we're all going to not pay taxes today. Who cares? It's going to be withheld in most cases. You're going to owe it anyway. Who cares? But under the fair tax, if you wanted to get a big rally going and nobody bought anything today, that greatly affects the revenue of all the governments. Okay? You're going to get their attention. And so it's more putting power, and that's what frightens and terrifies not only the U.S., but other countries like Trudeau and Canada are looking at this as very frightening because it takes away their control. And there was that Rasmussen poll that said that of the elites, meaning people making over $150,000 that went to one of the elite colleges that work for either nonprofits or government, that they just are firmly convinced that they're so much smarter than everybody else that all of these things should be put in their hands. And I think a lot of DC is made up of those people in senior positions. I'm sure it's true in all the other countries around the world. And so you've got a situation where, 70% of the ones that were polled said it's okay to cheat to win an election to prevent somebody who's going to do things bad. In other words, keep Trump out or keep somebody else out that they don't agree with. So you've got that mentality that feels like because they are the smart people and the rest of us just need to shut up and obey. That gets thrown out the door largely if you take back control of the fair tax. And that's terrifying to those people. It's terrifying to members of Congress in the U.S. who use the tax code as their own personal campaign ATM. Because all they have to do is threaten to impose taxes on some special interest, and the money comes flowing in from the special interest. So we're talking about a radical shift of power.
Steve, listen to you talk about that. I think that there's another way to put this, okay? In that, isn't getting rid of the income tax, or say, adopting the fair tax, replacing it, isn't that absolutely essential for a healthy functioning democracy?
I think it's absolutely essential.
So here we are. That's for a functioning democracy. Okay. It puts, it ends taxation as weaponization. It puts responsibility back in the hands of the people. Yet, you look at the discussion on this out there and people think this is a crazy idea. So, I mean, what was it? People, they don't want to be responsible. They don't want a healthy democracy. They like the tax code being weaponized. I mean, what can you infer from this?
I think that you've got people starting to wake up more. Just like you said in Canada, the shelf life is maybe 10 years. Well, in the US, the shelf life has been a lot longer. But as you see more of these, what we consider anti-democratic ideas of taxing wealth before it's received and attacking people, not just the billionaires, not just Elon Musk, but Jim Bennett and Steve Hayes in the US, and saying, look, you are being selfish because you have gains there you haven't taken, or you've got too much in your retirement. You've saved too much money. You've got too much in your, there's literally a thing where it's been proposed in the U.S. Congress that if you have over, and I think it's like $2 million in your Roth, your IRA that is, that it doesn't escape taxation. So the gains above that base are taxed every year.
You somehow become an enemy of the people.
Yes, right. Because you are not helping the people because you're not paying taxes that they believe you should pay.
So if we, I know you have to go in a minute, so sort of bringing this close to a close. If Charles Adams were to watching over this discussion, do you think he might say, as goes taxation, so goes civilization?
I have heard him say that,
Oh,
exactly those words, and he would explain why, and he would, through history, and he would talk about the civilizations that lasted the longest were the ones that had the sanest tax system and the easiest to comply tax systems.
right. And I think we all would agree that he would disapprove in the extreme with where things are today. Would you agree, Jim?
I certainly would. I mean, I think as the tax system grows and as compliance with taxes starts to overshadow normal personal and economic activity, I think that, and as the weight of that would contribute to the weight of the state and to the I'm trying to think of the word as to the diminishment of personal responsibility. I think that what the fair tax does is it returns all those positive things to the individual, and it creates a base whereby people start to make rational decisions instead of tax-based decisions. And I think that starts to filter up to the level of government that makes the government more responsive and responsible.
Of course, a lot of people would say that responsible decisions are tax-based decisions, but I think we would all agree that that's really just evidence of a decayed society.
I think so too. And I've really enjoyed it, John, but I have unfortunately a mediation to go to and conduct. And
good luck with that, and thanks for the conversation. It's always great.
I've enjoyed it very much. Hope we can do it again. And I always enjoy being with you and Jim.
But John, thank you so much for having me on as well. I
All right.
always enjoy these sessions.
Do this again soon. There's lots going on in the world of tax and therefore in the world.
Yes.
Thanks very much. So I've been here with Steve Hayes and Jim Bennett. You can learn about the fair tax at fairtax.org. Thanks very much.